Every country on Earth owes money, not a little, not temporarily, a lot, and permanently. The United States has crossed $38 trillion in debt, the highest in its history. Japan is close to $9 trillion. Europe carries tens of trillions more. Even countries rich in oil, exports, or manufacturing all share the same condition: debt. So here's the question no one ever answers clearly. If everyone owes money, who exactly is getting paid? Because debt isn't just a financial problem. It's the hidden architecture of the modern world. It funds wars, fuels growth, triggers crises, and quietly decides who holds power. And when you follow the chain of lenders long enough, you reach an unsettling conclusion. The world doesn't owe money to a single entity. It owes money to itself, but that doesn't mean everyone benefits equally. When debt became a weapon. To understand how global debt passed $300 trillion, nearly 3 times the size of the entire world economy, we have to go back. Not to Wall Street, but to war. In the late 1600s, England was fighting France and running out of gold. Instead of surrendering or crushing citizens with taxes, the crown made a deal with merchants. Lend us money now. We'll pay you interest forever, backed by future taxes. To manage that promise, the Bank of England was created. For the first time in history, a government could spend money it didn't yet have, and survive by doing it. That promise became something extraordinary. A tradable asset, a government bond. Other nations copied the idea. France, the Netherlands. The United States used it to fund independence, expansion, and industrial growth. Debt stopped being a weakness. It became proof of credibility. If you could borrow, you could rule. Empires once conquered land to extract gold. Now they issued bonds to extract interest. The battlefield moved from soil to spreadsheets, while the planet built on IOUs. Fast forward to today. Every nation borrows. Every bank lends. Every citizen is involved. Through taxes, savings, pensions, or insurance. Take the United States. Out of its $38 trillion debt, about half is held by investors. And most of those investors are American institutions: banks, pension funds, mutual funds, insurance companies, and the Federal Reserve itself. Only about 1/3 is held overseas. Japan holds the most. China holds far less than people assume. So when people say America owes China, they're technically right, but conceptually wrong. America mostly owes itself. The government issues bonds, institutions buy them. The central bank often buys them back. Taxes pay interest, which flows into retirement accounts and investment funds. Debt moves in circles. And this isn't uniquely American. Japan lends to the US lends to Europe. Europe lends to developing nations. Those nations park reserves back into Western bonds. Every country holds someone else's promise. It's a global game of financial hot potato. And the only rule is that nobody drops it. Who really controls the system? Behind governments sits the real power: markets, pension funds, hedge funds, sovereign wealth funds, central banks. Together, they manage tens of trillions of dollars. They decide who borrows cheaply and who pays a premium just to survive. When confidence disappears, currencies crash, governments fall, and economies are rewritten overnight. Democracy chooses leaders. Markets choose outcomes. At the center of this system sits the central bank. Central banks don't just manage debt, they manufacture it. When they buy government bonds, they create new money. One institution's liability becomes another's asset. Every dollar in circulation exists because of debt somewhere else. There's no such thing as debt-free money. The truth about repayment. Here's the part most people never hear. Modern government debt is not designed to be paid off. It's designed to be rolled over. Old bonds are replaced with new ones. The principal stays. Interest is the real product. This isn't corruption, it's policy. The United States has no plan to erase its debt. Japan has rolled its debt for decades, now exceeding 250% of its economy. Yet investors remain calm. Why? Because government bonds are the foundation of global finance. They're used as collateral. They stabilize banks. They anchor markets. If governments suddenly paid off all their debt, the system would collapse. Money supply would shrink. Markets would freeze. Deflation would spread. Debt isn't a flaw in the system. Debt is the system. Who really pays? But while the loop is circular, the rewards are not evenly shared. Interest flows upward. From workers and taxpayers to institutions and asset holders, debt quietly transfers wealth year after year. That's why rising debt and rising inequality move together. Creditors aren't villains. Debtors aren't victims. They're parts of the same machine. The danger comes when confidence breaks, when borrowing can no longer support the promises already made. Because when that happens, debt stops being abstract and becomes personal. There is no single enemy. Not China, not Wall Street, not the IMF. It's all of them, and all of us. Debt has become money itself. The world runs on belief that it will always work. The plan was never to pay it back. The plan was to keep everyone believing it could be. And as long as that belief holds, the numbers can grow forever. When it doesn't, the illusion ends. If this changed how you see money and power, subscribe for more from History and Finance.